You're listening to Pod 99, a podcast by Wealth 99 that helps the 99% take control of their financial future. We talk to experts from across the alternative asset space who share their insights on new wealth, how to build it, and how to keep it. Let's get on with the show. Hey folks, welcome to the Wealth 99 podcast, the podcast that helps the 99% take control of their financial future. We talk, of course, to experts from within Wealth 99 and from across the alternative assets space. Experts who are here to share their insights on how to build new wealth, how to create new wealth, and of course, how to keep it. Very excited today to be joined by my guest, Mark Yusko. Mark, of course, is the founder, CEO, and Chief Investment Officer at Morgan Creek Capital, which I believe has $2 billion in assets under management. And Mark is one of the most brilliant and insightful investors on the planet, in my view. And he was also, of course, one of the first traditional hedge fund guys to really publicly embrace the promise and potential of Bitcoin and talk about it on the public stage, which he continues to do. Welcome to the show, Mark.
No, thanks, Andy. And I appreciate the really generous and kind intro, and excited to be talking to you. I'm always amazed when we get to do this, that, we're on opposite sides of the world talking live. Technology is an amazing thing.
Technology is an amazing thing indeed, Mark. And I think, in some respects, you could say that technology is kind of one of the themes behind your various investment theses. Let's just start at the beginning. You kind of been known as being at the edge of institutional investing for decades. You're an early champion of alternative assets. Love just to understand your thinking on what alternative assets are and why they're so important.
No, I love the question because, my life, Andy, is really interesting. It was a series of happy accidents, right? I didn't actually intend growing up to be an investment person. I thought I wanted to be an architect. Most people are too young to remember, but there's this show called The Brady Bunch here in the States. And, the dad on that show was an architect. And I thought that was a really cool thing. So went to school, studied architecture, but decided I didn't love it. Went to business school and then took a job with an insurance company because that was at a time when I just took a job that I could get. Long story short, the guy doing investments retired. And I kind of started doing bond investing, which, very boring. Who wants to invest in bonds? But it's a good fundamental, baseline for understanding cash flows and corporations. And then I went to work for an equity firm, learned the equity business. And then I got the real lucky break that got me to the alternatives world, as we would say, as I went back to the alma mater. So I went back to Notre Dame, worked in the endowment, and the endowments have for years focused on this area of alternative investments. Now, to be fair and transparent, I don't like the term alternatives because I always say alternative to what, right? There are only four things you can own in this world: stocks, bonds, currencies, and commodities. Everything else is some derivation or combination of those things, right? You think about real estate. I can own the equity of the deal, the debt of the deal, or the land, the commodity. Mutual funds own stocks, bonds, currencies, commodities. Hedge funds own stocks, bonds, currencies, commodities. Private equity, I own common stock, preferred stock, or a convertible bond. But we created these nuanced asset classes, from venture capital to hedge funds to alternative strategies. And, the traditional investors in the 50s and 60s, they owned bonds, right? Equities were esoteric. They were alternative. And then in the 70s, you got ERISA. And if you didn't have equities now, you weren't being a good fiduciary. And then kind of in the 80s and 90s, these endowments started to push into the world of other strategies. And my really big aha moment, Andy, was in 1995, working at the endowment. And we had spent a bunch of time out in California on Sand Hill Road. We met with a bunch of venture capitalists. And we gave some money to this little firm, which at the time was not famous, called Sequoia. Today, everybody knows Sequoia. And Michael Moritz is one of the greatest investors of all time. He hadn't actually made any investments yet. He had just joined the firm. And Long story short, we gave them $5 million out of our, couple $2 billion. They put 10% of it in this little company called Google. Right. At the time, right, it was kind of a stupid name. Now it's a verb. Why did we need another search engine? There were already 20 search engines. Why do you need 21? And little did we know that they weren't a search engine. They were redefining the way you actually interact with the internet. Long story, that 500K turned into $200 million. And, head explodes. And I'm like, oh my gosh. And it hit me that investing in innovation as an asset class was really the best alternative investment that you could make. And so for the rest of my career, now coming up on 30 years, since then, I've really focused on investing in innovation, primarily through venture capital, but in other forms. You can do it in the equity markets and other forms, but innovation as an asset class. And that's ultimately what led me to digital assets and digital technology and cryptocurrencies and the like. But it was that technology, not as technology in and of itself, but the innovation to create new businesses that create jobs, create new equity, create bonds, and we get to invest in them.
Got it. Thank you, Mark. And you're exactly right. And you said it yourself right at the beginning of the show. You said, isn't it amazing that here we are once again talking to each other, looking at each other from across the different sides of the world, which of course is made possible through the wonders of human technology, which it won't have escaped your attention, Mark. The acceleration of technology is those S curves, which we'll get to, I'm sure, are starting to speed up. But let me just read this quote that you've got pinned on your Twitter. You've had it pinned on your Twitter, I think, since 2018, Mark, and it's just such a brilliant quote. It says that the greatest wealth is created by being an early investor in innovation, and making that investment requires believing in something before the majority of people understand it. You will be mocked, ridiculed, and criticized for your non-consensus action. It is absolutely worth it. So that's kind of your thesis in a nutshell, Mark.
No, it really is. And look, there's so many sub points here. One is, if you do what everyone else is doing, you're never going to make a lot of return, right? Because you're going to get the average return that the averages are going to get, because they're already there and it's already in the price. And that's fine. And if you think about the long-term average return for bonds, it's about 6%, about 2% above the inflation rate of 4%. Now, 2% real isn't a lot, not a lot to live on. You'll steal your wealth over time. That inflation kind of takes your purchasing power away. So then you can buy equities. And if you get the average return in equities, you make 11%. It's not bad. But if you're willing to take risk and go places that other people won't go, and one of the things about that, believing in something before others understand is really hard. I mean, Will Durant says, every custom begins with broken precedent. And you think of all the great thinkers of the world and all the great discoveries of the world. They all were ridiculed. Some of them were even put to death back in the ancient times. Thankfully, we don't have to deal with that now. But if you go outside the majority or the consensus, you really are thought of as iconoclast or a rule breaker or not a friend of the state. And yet, if you think about investing, all of really the great fortunes came from people's belief in something new. There's a famous one about Henry Ford's lawyer tried to talk him out of starting the horseless carriage company. He's like, Hank, people just want a faster horse. They don't want this fancy machine. Hank's lawyer was wrong, and Hank was right. And there's myriad examples over the years where automated data processing, right? ADP. It's not even a great company, but it's a solid, good company. And the head of Apprentice Hall, the book company, said, I've traveled the length and breadth of this great country, and I've talked to all the greatest minds, and they assure me that data processing is a fad that won't last the year. By the way, anytime something is labeled a fad, you should buy as much as you possibly can, because eventually it will be common knowledge and accepted. And the other one is if something rots your brain, like video games, or if they tell you to rot your brain, you should probably investigate closer. But that's one piece, right? Is having the courage to do something that's non-consensus. Well, how do you get that courage? Well, it comes from conviction. Well, where do you get the conviction? Hard work, just doing the work. And doing work isn't that hard, really. I mean, it's not rocket science in most cases. It's just time and diligence and sticking with it after setbacks and trying new things. And one of the things is there's this thing I say, early sometimes is the euphemism for wrong. And I'll tell you an example. So we had this amazing client. He was a founder of a company that most people have heard of, J. Crew. And, he founded the business and sold it to a big private equity firm and retired. And at 83 years old, the guy was still investing his own capital, and he hired us to help him. And he called us up in 2006. And I mean, he was madder than a wet hen that day. I mean, he was spewing fire. He was so angry. We're like, Arthur, what's going on? You're worth $300 million. You've got this nice life. You don't have a lot to be upset about. Just, I deserve to live here. Like, what are you talking about? And he lived in this place called Incline Village, Nevada, where people go, from California so they can avoid taxes. And says the average home price in this community is $11 million. I sold my business, and the guys on either side of me, 35 years old, kids, there's no way they can afford these homes. This ends badly. Find me a way to get short. Like, okay. So we went out and we looked and we met this guy, John Paulson and John Burbank and Phil Falcone and Kyle Bass. And we studied it and we put money out. And we put money out in February 2006. And if you've watched the movie The Big Short, this was right about the time where Goldman squeezed all the shorts. And the prices ripped, and we were down 40% in the first 2 months that we put that trade on. And we're like, oh my God, I guess we blew it. No. The next 12 months, we made 500%. I mean, not us, but the guys that we had hired. And it turned out to be a great trade, one of the great trades of the decade. But man, it didn't feel good those first couple of months. So that just goes to, we had to have the courage from doing a lot of work. We went out and did a lot of work. And then we had to have conviction to trust these guys who were going to implement for us. But then we had the test, right? We were mocked. We were ridiculed. Our clients said, you're idiots because you just lost 40% of our money. And they didn't call us idiots when we made them a lot of money on the other side. But I don't know. That's a long piece on a little piece of that. And then the last part of the quote, which I think is important, it is absolutely worth it, right? You think about most things in life that are worth it are hard, right? Whether it's working out, whether it's eating right, whether it's being a good person, it's not easy. So those things are worth it because if you put a lot into it, you get a lot out of it. And I think that's a really positive thing. So same thing here. If you put the work in, you get good outcomes and it's worth it.
Absolutely, Mark. And look, I want to slowly start moving towards Bitcoin, which I think is, the perfect example, because even though Bitcoin has been around for, 15 years or whatever it is, and we've had, at least say probably 3 boom and bust cycles. I think on the bigger, longer term time frame, it's clear that Bitcoin is still early because the simple matter of the fact is only perhaps 2% 90% of people on Earth own any, and the rest of the people are still happy to laugh at us Bitcoiners, which is an indication of how early we are. So if that's the backdrop, Mark, maybe we can talk about a way in, perhaps, is through Morgan Creek Digital, which is the digital assets arm, or the technology, the kind of the bleeding edge of technology part of Morgan Creek. And I was just looking at your core investment thesis at the moment, and I was fascinated that you've kind of framed it around this idea of digital innovation, particularly 4 pillars, which you describe as essentially the building blocks of the next generation of the internet. So it's really the combination and intersections of artificial intelligence, AI, blockchain technology, the associated computing infrastructure, and the big data that kind of powers it all. So it's the interesting intersections of those pillars that unlock the next generation of the internet, Mark.
Oh my gosh, Andy, you got to come on the road with me. That is a beautiful summary. And, I don't want to over glamorize this, kind of thesis we came up with, but it is exactly as you say. It's about building blocks, and not to make it overly simple, but like little kids building, little kids blocks with the A, B, C, D, that is the 4 pillars, AI, blockchain technology, which we'll talk about, computing infrastructure, which includes devices and hardware, and then data. And data is the oil of this age. And what's really interesting is, look, I said, my life's just a series of happy accidents. And, my dad started the journey in the 50s. So in 1954, there was this big innovation out in Boston, out in Route 128 in Boston. And this thing called the mainframe computer was born. Companies like Wang and Unisys and Burroughs and IBM. And then 14 years later, there was an innovation out on the West Coast and around this microchip. And suddenly you could make smaller computers. So my dad was a computer salesman or computer installer for IBM mainframe computers in hospitals. And we lived in Seattle. And so with that innovation around microcomputers, you started to see innovation around the West Coast. And these young people were creating these amazing companies. And, we've heard of a few of them. Intel and AMD were started in 1968. And then 14 years later, where I lived in Seattle, there was this innovation around personal computing. And it's really funny. So a couple of things. One, it's always 14 years. Now, why is it always 14 years between these big innovations? Well, it's half a generation. It's the creative class within that generation. It's always young people. And why is it always young people? Well, us old guys, we're kind of set in our ways. We don't like to change our mind. We don't try new things. We kind of like our life. Young people have nothing to lose, right? They're like, I wonder if I could do that. Yeah, I'm gonna try that. And they don't fear failure, right? They just fail over and over. And like as Thomas Edison said, I've never failed. I just found 10,000 ways not to make a light bulb. But in 1982, it's funny, Steve Ballmer's mom quoted the CEO of DEC, Digital Equipment Corp., which was one of the first mainframe companies out in Boston. And he had said, no one would ever want a computer in their house. And so Steve's mom said, honey, why would you work for this company, Microsoft? No one want a computer in their house. He has 18 billion reasons he was right, mom was wrong. Yeah, people want a computer in their house. 14 years later, there's this innovation around this thing, right? The computer in our hand. And suddenly the mobile net was born. I'm sorry, 14 years later, it was the internet first, 1996. And in 1996, the internet. And that was companies like Yahoo and eBay and Google. And we set this series of protocols, which you and I are using right now. TCP/IP allows us to have voice over internet protocol for free, right? We're talking to each other live with video for free. Whereas, 20 years ago, it would cost us $5 a minute to talk halfway around the world, no video. And then 14 years later, the iPhone and the mobile net. And now 14 years later, which is next year, 2024, we have this thing called the truth net. Well, what's the truth net? Well, the truth net is where we move from trust to truth. And we'll get into that. And that's where blockchain comes in. But to tie it kind of all together. So we have these 4 building blocks. Now, everyone's talking about AI like it's some new thing. AI has been going on really since mainframes started in the 50s. And we've had these mini booms and busts around AI. Remember, we had Clippy back when Microsoft started. You had this little AI thing that was going to help you. It was horrible. And then we've had, other AI over the years. But, ChatGPT, these large language models, it's real. It's an innovation, but it's really not that big a leap over what we had before. And now we have better chips and we have better networks. And so we've made progress, but it's not done. It's still early in AI. Blockchain technology is a better database, right? Historically, we've had centralized databases. Visa today runs on a centralized database on a mainframe computer, believe it or not, running in COBOL, a dead computer language, literally dead. They won't upgrade. They can't upgrade. It's too expensive. And it's kind of a moat because no one knows how to hack it. But that will eventually get replaced with blockchains. Blockchains are better, more efficient public databases. Computing, right? Computing moves in this exponential S-curve cycle that you mentioned that's so important. Exponential growth, it really is the 8th wonder of the world. I challenge people all the time. I say, take a piece of paper and try to fold it 8 times. Can't do it. And everybody's like, of course I can do it. Try it. Can't do it. And, if you could do it 20 times, it'd be as high as your house. 30 is the sun. 30 is the moon, 50 is the sun, and 100 is the known universe.
Yeah,
So
my favorite way of explaining exponential growth, Mark, and probably you can take this one, but it's the chessboard problem, right? You're familiar with with how that works?
Yeah. No, though that was amazing, right? The guy wins this. I can't remember what it was, a contest of some sort, and he says to the king. The king says, "Well, what would you like as a reward?" He says, "Well, I'd like a grain of rice on the first square of the chessboard, and then double it every time. And if you did that, you'd have enough rice to cover the country of India 3.5 meters deep."
Yeah, I actually have the number here because I have this in my notes because I knew we would talk about exponential growth, Mark. So the number of grains that would be on that final grains of rice that would be on that chessboard is 18 quintillion, 446 quadrillion, 744 trillion, 73 billion, 709,551,000. That's how many grains of rice would be on the last piece of the chessboard. Just by going doubling.
What's incomprehensible, what's incomprehensible about that, Andy, is, trillion was in the middle there, right? We had quintillion, quadrillion, and then trillion. Just a single trillion. You and I would have to take a grain of rice and put one on the board every second for 31,710 years to get to a trillion. That's a lot of rice.
Yeah.
And so exponential growth is just this amazing thing. And
it is.
And it is in everything. So I ended up a biology major, right? I dropped out of architecture and I studied biology and chemistry. And really biological systems, I think, are at the root of everything. They're at the root of innovation. They're at the root of investing. They're at the root of viral, things that go viral, that become popular, exponential growth. That's how, things multiply. And so when you just think of these complex adaptive systems and how they interact with one another, and that's why if we take the power of a computing platform and we had tools like AI and blockchain, which essentially is an operating system. Blockchain is the operating system for the Internet of everything, the way mainframes ran on COBOL, the way, microcomputers ran on Spark, the way PCs run on DOS or Windows, the way these things run on, iOS or Android. And now we're going to have blockchains that power everything. And they are a far superior way of storing and relating data. And they use cryptography for security. And then the last piece of it is the actual data, right? The amount of data that's created. And I don't have these numbers off the top of my head, but I could just do like most, where they say 85% of statistics are made up on the spot. So I could just do that, but I won't. But the amount of data that's created every hour is more than all the data like the first 50 years of computing or some crazy thing like that. And so all of that data plus the tools and the computing power allow us to solve harder problems, to do bigger things. But the thing that gets me so excited, and the reason I started more Greek Digital is, I spent most of my career in traditional tech, hard tech, healthcare tech, biotech. And it was great, loved it. But in 2013, I got introduced to blockchain and Bitcoin. And I joke, I wasn't running drugs on Silk Road, was not a cryptography student. I didn't get it. And so I'm not as wealthy as I could have been because I didn't get it and I didn't do the work. But I got blockchain. As soon as my friend explained blockchain and how it was an operating system, I'm like, yep, I made a lot of money in operating systems. I can invest in that. It took me 3 or 4 years to really understand what Bitcoin as a use case of blockchain really is. It's just a superior form of money, right? It's a pretty big deal. Money's a pretty big deal. And essentially digital gold. But once I had the aha moment, once I saw that that's what it was, I could never go back. And so we formed more Greek Digital in 2018. We've raised 3, about to be 4 venture funds to invest in the infrastructure around the digital asset ecosystem. And we invest in all 4 of these pillars. And, it's probably too much of a stretch to say that the combination of those pillars is kind of like the ATCG in DNA, right? I mean, think about it, there's only 4 building blocks of all of life. Pretty crazy. But you can repeat them in many, many different ways and different patterns and create different species and different, intelligence and all kinds of stuff. But there's really only 4 building blocks. And so the same thing happens in the digital age as we move from the analog physical world to this digital world where everything, every stock, every bond, every currency, every commodity, every piece of art, every collectible car, every private business, every identity card, every marriage license, every property title, everything will eventually be a digital entry on a blockchain, public, available, true. And the key point is truth versus trust. So for 800 years, we've had this monopoly. It's really more of an oligopoly of trust agents. Well, how did that happen? Well, in the olden days, I would lend you money. And there was a book. I had a book. I was the lender. I had a book. And I'd say, okay, Andy owes me $100. And you'd come back a year later to pay me my principal plus interest. And I'm an unscrupulous guy. I erased 100. I wrote 200. You're like, here's your 110. I'm like, no, you owe me 220. No, I only borrowed 100. Hey, says right here, you had to trust me and I'm not trustworthy. So you're out of luck. So the Medicis 800 years ago said, all right, Andy, you keep a ledger, and Mark, you keep a ledger, and we, the benevolent Medicis, for a small fee, will arbitrate that the ledgers match. But here's the problem. I go to the Medicis, who were not so benevolent. I say, you know what? I'm going to write down 200. I'll give you half. And so when Andy comes back, you say my number's right. So you come back to pay the 110. I say it's 220. Medici's like, Andy, you must have made a mistake. I'm sorry. And, it was a bad system. And so for years, we've had auditors and tax accountants. And think about this number. All of the money spent globally for trust, right? To make sure that bank accounts are the right number and that our insurance titles match and that our licenses work. All of that trust costs $7 trillion per year, 6 to 8% of global GDP wasted because we can't trust anybody. Well, now we have a technological solution, a digital record database that says, Andy writes down 100, Mark writes down 100, and this global supercomputer with all these nodes that are independent say, yep, we see that. Now that is truth. We don't have to trust each other. We don't have to trust the Medicis. We don't have to trust JP Morgan. We don't have to trust anybody. We have truth. That epiphany and that migration, one, it'll free up $7 trillion to do good in the world. More creativity, more freedoms, more, less tyranny, less corruption. And imagine people won't be able to cheat, right? Can't cheat on your taxes anymore. It's kind of a cool world. Well, unless you're a cheater. But for the rest of us that aren't cheaters, it's a better world.
Yeah, so well said, Mark. And this is why Bitcoin is because Bitcoin, from one angle, is certainly the only really truly decentralized, censorship resistant blockchain at a global scale, kind of nation state level, right? So I think that's if we're really wanting to take the fallibility of humans out of that trust equation, which is what a blockchain is supposed to do, then Bitcoin does that very effectively. What's interesting, of course, about Bitcoin, Mark, is we've seen these let's say 3 boom and bust cycles in crypto and Bitcoin. Mm-hmm. We're kind of at the bottom of a bear market cycle at the moment, when the traditional mainstream retail interest in Bitcoin is non-existent. The Google search interest in Bitcoin back down, dropped off a cliff. Of course, what is interesting is we're about 10 months away from the next Bitcoin halving, which could make, it probably will be an interesting time for Bitcoin. And it means that if you're a serious Bitcoin investor, or just a Bitcoin accumulator, someone who has a little bit of Bitcoin, now is potentially a good time to just keep chipping away at stacking those Satoshis in the lead up to the halving, Mark.
Now, look, again, so well summarized. Bitcoin is a remarkable cryptographic achievement. Right? It really is. The fact that we can have money, an asset that's not duplicable in the digital world, was a really tough problem to solve, right? People were working on that problem for 40 plus years and couldn't solve it. And what Satoshi Nakamoto, again, whoever he, she, they are, I guess he identified once as a he. I think it's more than one person, but maybe it was one person. But there were so many things that were just genius about it. One is the fixed supply. Okay, so it's a deflationary currency as opposed to an inflationary currency. Unlike most paper currencies, right? There have been 775 paper currencies in the history of the world. 3/4 of them no longer exist. They're gone, right? Went to zero. The rest are on their way to zero. They're down 99, 98, 97%. And that's because governments have a predilection towards spending, right? We go from capitalist societies to cronyist societies to dictatorships. And as this power gets centralized at the top, what do? They spend and give money to their friends and take it away from the masses through this thing called inflation. Well, Mark, they tell me inflation is good for me. How could something that over a 30-year period takes half your purchasing power be good for you? Just think about that, right? A 2% inflation rate, after 30 years, half your money is gone. That's not good, right? But they've convinced you that it's good. All it is currency devaluation. So Bitcoin comes along and says, you know what? We're going to have a fixed supply, 21 million forever. Now, there's 21 million Bitcoin, but each one is divisible to 8 decimal points. So there's 2.1 quadrillion Satoshis, which is why my Twitter handle is hashtag 2.1 quadrillion. And 2.1 quadrillion is plenty, right? Plenty of Satoshis for the world. And what people miss, and this is the part, the reason that we have this volatility is volatility is an indication of disagreement about future outcomes, right? Amazon stock has the same volatility as Bitcoin, 80. They're the exact same number. Now, Amazon's been around for 27 years. Bitcoin's been around for 14 years. Amazon's compounded 40%, 40, for 27 years. Plug that into the HP 12C, 1.4 to the 27th. It's a big number. But here's the funny thing. Every single year, including this year, it's had a double-digit drawdown. The average, this is the crazy part, the average is 31%. So on average, every year you've been a holder of Amazon, you've lost a third of your money. Okay? Twice, it went down more than 90%. 5 times, it went down more than 50%. But when was the right time to sell? Never. But who bought it in 1997 and held to today? There's only 4 or 5 people in the whole world. Jeff, mom, dad, ex-wife, Bill Miller. Bill Miller's cost is 7 cents per share. And he's never sold it. But why? Why are they willing to tolerate that volatility? Because they have confidence in the outcome. They don't doubt outcome. They knew that the amount of e-commerce was going to rise over time as people became, more comfortable with it. The same thing here is with better money. If you think about what Bitcoin is, it's a superior form of gold. Gold has been money. Money is an asset that exists in the absence of a liability. There's only one in the whole world, gold. Everything else is currency, which is debt supported. Gold has no liability associated with it. So all the central banks own gold as the base layer, and then they create currency on top using debt. And that's fine, and that's what we all use, but it can be devalued. Gold doesn't devalue. In fact, gold has been a perfect store of value for 5,000 years. Single ounce buys you a fine person's suit for 5,000 years. Now, what's the problem with gold? Well, it's really heavy. It's really dense. Like if I had a bar here, I couldn't break it in half. Even if I could, if I were strong enough, I couldn't stuff it in the computer and send you half of it. So it's not very portable or divisible. But if I have a Bitcoin, I can send you half like that instantaneously. And in the old days, if I wanted to send you money, I had to have a bank account. You had to have a bank account. And when I sent you money, they took a fee, and you'd get 80 cents on the dollar because Western Union has to take a fee, and then the BIS has to take a fee because it went across international borders because the Rothschilds have to get their cut. So crazy stuff. But with Bitcoin, I can send it to you instantaneously, no fee. Well, then what's going to happen? More people are going to own that. So if you think about Bitcoin, start at 0. January 3rd, 2009, 0. Today, $500 billion. No, but Mark, it's volatile. It's gone down a lot since last year. Yeah, but it's gone up. Total value goes up every year, year in, year out. There's volatility, sure. But just like Amazon, it just goes up. And the interesting thing is Bitcoin's actually compounded at twice the rate of Amazon. So it's actually done better. But most people don't think of it that way. They're just afraid of the volatility. But volatility is not your enemy. In fact, I have a shirt that says embrace volatility. Volatility is your friend. What you want is to own lots of assets that are highly volatile, that are uncorrelated with one another in a portfolio. You said about how do you stay rich? Well, that's how you stay rich, right? You get rich from concentration, take single bets, get lucky, whatever, or work really hard and own a business. I mean, lots of ways to get rich. But it's all about concentration. Staying rich is about diversification, diversifying portfolios into volatile assets that are uncorrelated to each other and that have different return drivers. The thing that's awesome about Bitcoin, when you add it to your portfolio, the risk of your portfolio goes down, not up, because it's uncorrelated, 0.0 correlated to bonds, 0.15 correlated to stocks. And so every time you add it to a portfolio, your Sharpe ratio, your return per unit of risk, goes up. So if you're a fiduciary or just someone who wants to get wealthier over time, you should stack sats every day. And you shouldn't try to time it. Like I was on TV, 2000, it doesn't matter, it was 18, I think. And while I was on the show, the price went from 10,000 to 8,000. It was only 6 minutes, right? It just had one of these bad days where it was crashing. And the Melissa Lee, the host says, what should we do? Buy it. So, no, well, you'd always say that. Yeah, buy it today, buy it tomorrow, buy it next week, buy it next month. Don't buy it all at once. Buy it over time and accumulate a position in your portfolio because it's the single asset that is resistant to devaluation. Well, there are two, gold and Bitcoin. And you should own a little bit of both. But The thing I love about Bitcoin that is really misunderstood, one Bitcoin is one Bitcoin. One Satoshi is one Satoshi. But we don't price Bitcoin in Bitcoin. What do we price Bitcoin in? We price it in dollars or New Zealand dollars or Aussie dollars or pesos or Turkish lira. Now, here's a funny thing. There's never been a bear market in Bitcoin in Turkey because the price in lira only goes up, or in Argentina, or in Venezuela, where the bolivar is down 99.99999%. So it's not that Bitcoin got better, it's just the other currencies got worse. And so as an asset owner, I want to have a portion, not all, but I want a portion of my wealth in an asset that's a perfect store of value and that will hold its value relative to these other devaluing currencies. Now, there are certain things, real estate, stocks, a few others, that will benefit from currency devaluation, right? Because they rise in nominal value as the currencies devalue. And so if you're looking about super rich people in every country, the 1% that we all talk about, what do they own? Lots of real estate, lots of stocks. And at the top of the pyramid, what goes up? Like in Venezuela, right? All the poor people got super poor because they lost all their life savings because it was in cash and they devalued the currency. What did all the rich people do? They owned all the assets that went up in nominal value and then they sold for dollars. Great trade. So again, long answer to a really important question, which is, why is this so important? Where are we heading with it? And where we're heading is what the internet did is it made information bidirectional. And it broke the monopoly that the state and state entities had on media and commerce, right? And if you go back even further, the first monopoly was information. The church had the monopoly on information, and people couldn't read, they couldn't write, they'd go to church, they'd be told what to think, how to think. And then the printing press came along, busted that monopoly wide open. Suddenly you could print, you could write, you could teach, you could transfer information in books. Well, what happened? The states took over. They said, we're going to restrict what you can read and what you can't, and what you can write and what you can post. And we're going to restrict the flow of information. Well, the internet busted that wide open. Well, now to change value, we have to use this oligopoly of banks, not with blockchain, not with Bitcoin. I can send you a Bitcoin right now. No one can stop me. The banks are closed, don't have to be open. We can do it offline, peer-to-peer. No one can say anything about it. And that uncensorable, unseizable, uncontrollable asset busts the monopoly of value transfer wide open. And when we can transfer value peer-to-peer in a world where it can't be devalued by states, what happens? Suddenly we unlock massive creative potential because our wealth isn't being devalued by the state. It's pretty cool stuff.
Very cool stuff indeed, Mark. So much to think about there. Thank you so much for sharing your thoughts. I think what we'll do now is let's go to a very quick break, and then we'll come back and we'll finish off the podcast by just hitting Mark with some shorter form questions. We'll just get some shorter form actionable answers and insights on everything wealth building, Bitcoin, gold, tokenized gold, all that good stuff. We'll be back in one moment.
The era of new wealth is coming, where the world's most exciting investment opportunities are no longer restricted to the top 1%, and where the 99% can take control of their own financial future. It's the era of alternative assets, driven by blockchain technology, tokenization, and fractional ownership, digitizing large-scale assets, breaking them into smaller parts, making them more accessible for the everyday investor. World-shaping innovations, bringing unprecedented diversification, participation, security, and control. So no matter who you are, where you come from, or how much you earn. The power is in your hands. This is New Wealth. Find yours with Wealth 99.
All right, we are back, and I'm with Mark Yusko from Morgan Creek Capital Management. It's been a pleasure diving into everything Bitcoin, innovation, technology, exponential growth, all that good stuff with you today, Mark. I thought I'd finish off just going to run some questions at you and just, see what you've got to say. I guess question one for you, Mark, what is one piece of financial knowledge that should be taught at schools?
Oh, geez. One, so many. I mean, I would say the one, invest early, right? Start investing early. The earlier you start, the more compounding works in your favor. And the compound interest, other than exponential growth, is the other wonder of the world. So if exponential growth is the eighth wonder of the world, then compounding is the ninth. And starting to invest early. And coupled with that, Andy, I'll take a 1 and 1A. 1A would be take risk early, right? Don't do the safe stuff. Like, I actually believe it should be against the law for the first 40 years of your life, from 20 in your 20s to your 60s, to own bonds in your portfolio, right? It should be against the law. Instead, they tell you when you go to a job and you get your retirement, put it in GICs, guaranteed investment contracts, or put it in bonds. No, then the government steals from you in the form of inflation and you give a fixed income. Later in life, if you want to secure some cash flow, fine. But early in your life, you have a form of fixed income in your future earnings, your future wages. That is a form of fixed income. So you should take all equity risk early on. Diversified equity, I don't just mean stocks, and I don't mean a single stock, but I mean stocks. I mean private equity, venture capital equity, real estate equity, commodity equity, all of those things. But getting started early and really understanding the difference between risk and volatility, I think are things we should teach in school.
Yeah, and look, that is similar to something you often say on Twitter, Mark, which is fear equals edge. Why is fear a good thing? How can fear give you an edge?
Look, fear isn't the bad thing. It's the paralysis from fear that's the bad thing, right? The people, if you have fear, it means you're intelligent enough to understand the risks of a certain situation, the probabilities of different outcomes, and what the actual threats are, right? The worst thing in life is to walk into an ambush, not realizing there are all the signs saying don't go in there. You didn't even recognize the threats, and so the presence of fear is not a bad thing. In fact, it triggers an autonomic response in us to act. And so it's the control of that action, that fight or flight reflex, and to be able to think through the rational decisions to address that fear and to conquer that fear and to continue to act. And the real edge is the ability to overcome and manage the fear and continue to act. And here's an interesting thing. The fear of loss or the fear of failure is what keeps people from doing well in life. And I say this all the time, that winners actually lose more than losers. People, what are you talking about? Well, winners aren't afraid of losing. So they try lots of things and they lose, right? Losers are so afraid of losing that they never try anything, and then they just lose. And so it's it's like a great basketball player. I just watched the Air movie, which is a great movie if you haven't watched it. Amazing.
Yeah.
And Michael Jordan, right? Greatest basketball player that ever lived. And he had this thing. He's like, look, I've taken 10,000 shots that I missed. I don't even remember taking them. And it was funny. I'm a Carolina fan. I live in Chapel Hill, and I'm a Notre Dame guy, but I live here in Chapel Hill. So I became a Carolina fan. And there's this other coach down the road, wears the dark blue at that other school. And I get to meet him once. And he says, what separates the great players from the average players? I'm like, no, coach, you're probably going to tell me. He says, yeah, the average player always focuses on the last play. The great player always focuses on the next play. Think about it. You're watching basketball, basketball finals. Bad player, the average player, misses a shot, goes back and commits a stupid foul because he's thinking about missing the shot. The great player doesn't even remember taking the shot, gets back on defense, plays defense, steals the ball, makes a layup. And that ability to not fear losing, to learn from the loss, and to then focus on the next opportunity, the next play. And, the good guy coach here, Dean Smith, who coached Michael Jordan, says you have to Ralph, right, with mistakes. You got to recognize it, admit it, really hard, admit you made a mistake, learn from it, and forget it. And if you can constantly do that and not worry about fear, not worry about failure. And the last piece is from Will Smith. I know it's not popular to talk about Will Smith anymore since he did the slap, but he's still a pretty smart guy. I've heard him talk a couple of times. And he says, fail fast, fail forward. Fail forward. And if you're constantly pushing to get better, to learn more, to take risks, to control that fear and to soldier through it, that's why fear is edge. It's a long answer.
I love it. Feel the fear and do it anyway. Mark, then if you were 22 years old today, and God forget, imagine if we could be, you and I be 22 years.
I know.
But imagine, put yourself in that mind state. What is one single thing, or what action would you take? What's one single thing you could do to secure your financial future?
It's a great question. So again, so hard. I think the first thing, it goes back to what I said, would be to start investing early.
Yeah.
Even with a little bit of money. And I think crypto really makes that easier, right? You can buy fractions of a Bitcoin. You don't have to buy a whole Bitcoin. You can buy little teeny tiny fractions of a Bitcoin. You can dollar cost average in, and I would definitely start investing earlier. The other little thing that I would say, just advice to my 22-year-old self, read about successful people.
Yes.
Right? Read about Steve Jobs and read about Julian Robertson and Stan Druckenmiller and the great investors of our age, and read about John D. Rockefeller. Not a very nice man, but one of the best businessmen ever in history. And learning what made them great, I think, inspires you toward greatness and can teach you a few tricks along the way.
I love it. All right, as we start to finish off, in 30 seconds or less, Mark, what is the bull case for Bitcoin?
Simple. Bitcoin is digital gold. It is the future of money, right? It's a better form of money. And therefore, people are going to continue to accumulate it over time. And more people are going to see the crypto light and migrate a portion of their wealth into Bitcoin. And supply and demand, right? Limited supply, growing demand. That's a good outcome for long-term success.
And with the halving, say roughly 10 months away, next bull market for Bitcoin, when do we think it will start to
June
kick off?
15th. So June 15th is what I call the summer equinox for crypto. So crypto has four seasons: summer, spring, winter, and fall. spring, summer, winter, and fall. It over at this 4-year cycle, this 4-year halving cycle. Now, what is the 4-year halving cycle? So really quickly, it's one of the most genius things. There are two genius things about Bitcoin. One is the idea of consensus in all the miners that secure the network. You need 51% to have consensus and legitimize a block. And everybody says, well, what about a 51% attack? This is the genius. There will never be a 51% attack, because the moment someone spends the hundreds of millions of dollars in time to do a 51% attack, you got to change 10,000 computers within a 10-minute window. Really hard, but let's say you could do it. The moment you do it, the value goes to zero because you've violated the trust. Genius. But the miners, what are the miners? Well, the miners are just data centers. In the old-fashioned world, you bought computers, you put them in a room, you plugged in power, and you went out and got Amazon or Microsoft to pay you money to use your computing power, CPUs. Then new computers came along, GPUs and ASICs, and now you can plug in these computers, and you don't have to pay to find customers. You just get paid by an algorithm. Well, what does the algorithm do? It pays you to secure the network. The Bitcoin blockchain is the most secure computing platform the world has ever seen. It's 1,500 times more powerful than the CERN supercomputer, the next most powerful computer. It's 10,000 plus nodes decentralized around the world. And these miners get a reward every 10 minutes called a block reward for securing the network. Here's the genius. Every 4 years, that block reward gets cut in half. Well, why is that genius? Well, here's the thing. The miners' costs are fixed. So if the rewards get cut in half, some of them will go out of business. Unless what? Unless the price rises. And as the price rises, what does that do? It draws attention and it brings more people into the network. And the way the network effect works, the more people that come into the network, the more valuable the asset. It is mind-blowingly genius to have this event that crystallizes the attention. And so the reason you get this sequence of spring, summer, winter, and fall is about 10 months before the halving, you start summer. Well, what's summer? Summer is a nice, warm, happy, people are anticipating the event, they're getting excited. Well, then the event happens, the price starts to move, and that's fall. That's right, everything's happening, people are coming back to work, and the price starts to move, and it goes too far. And then you have a crash because it went too far. It went above fair value. That's winter. And then when it gets too far down low, the value investors come in, and that's spring. And so you keep going through this pattern every 4 years. But here's the thing. Every 4 years, you got an up cycle, a down cycle, but then the next recovery is higher, and the next down is higher, and the next recovery is higher, and the next down is higher. So yes, it's a cycle, and yes, it's volatile, but the long-term track is upwards. Mad genius.
Wonderfully said, Mark. I could not have said that better myself. So much to think about there. And of course, listeners, it's as simple as that. The next halving is literally 10 months away. And as global media attention starts to focus in on that, some of that media coverage, of course, will be negative, but it doesn't really matter because Bitcoin will just be in the news again. And slowly but surely, I think that price will start to rise. Mark, it's just a wonderful pleasure to talk to you on the show today. Thank you so much for sharing some of your knowledge and wisdom. Look, any closing thoughts? You want to just direct people to your Twitter, your website, anything like that?
So
please, go ahead.
Thanks, Andy, for having me. It's really been great getting to know you over these years and doing this with you. So I really do appreciate it and appreciate what you built and the following you have. So thanks for sharing that with me. Easy to find at Mark Yusko, MarkYusko on Twitter. I'm actually not bad at DM. So if people reach out and are interested, that's how you and I met. So actually pretty good at that. We have a website at Morgan or www.morgancreekcap.com. And there's some stuff there, some resources. If you Google me on the internet, there's a lot of stuff out there. I've written a lot of letters. There's one I like people to read. It's called The Digital Gold Rush. And it's when I had my aha moment about, Satoshi and what, Bitcoin really was. There's a PDF of that out on the internet that I think is interesting to read. That's long, but I think it's interesting. I also did one called The Virus is Spreading, and that was pre-COVID. People were like, oh, you can't use the word virus. I'm like, viral, not virus, viral. And not all viruses are bad, by the way. But that's another one that's kind of interesting. But I guess the final thought I would leave people with is you can judge the quality of an idea by the quality of its detractors, right? If nobody really important dislikes your idea, it's probably not a really good idea. If the most powerful people in the world hate something, you're probably onto something. That's what's cool about Bitcoin. The other thing is Bitcoin's been declared dead 437 times. There's like an RIP Bitcoin website. It's not dead. It's not going to be dead. And the reason it's not going to be dead, there are 0 cases, and I can actually say that definitively. There are 0 cases of superior technology once it reaches critical mass going back. 0 cases. And look, Paul Romer won the Nobel Prize for this. It's called the law of increasing returns. It's not the best technology that wins. It's the technology that gets critical mass first. Because once you have critical mass and once people adopt it, there's no going back. And Bitcoin is a superior technology. It is a superior way of storing data. It is a superior way of using money. It is a superior form of a store of value like gold. And because of that, I think the next 5,000 years, like the last 5,000, were dominated by gold. The next 5,000 will be dominated by Bitcoin. That doesn't mean there won't be lots of other stuff to do. There will. So I'm not saying put all your money in Bitcoin, but you got to have some.
Thank you so much. Thank you so much, Mark. You got to have some. All the best, Mark, and bye for now. Thank you again.
All right. Thanks, Andy.
All right. Well, how good was that? That was, of course, Mark Yusko from Morgan Creek Capital Management. Always a pleasure to catch up with Mark. I just love the way he talks about Bitcoin and investing. Famously comparing it to the virus is spreading, and that classic investor letter from a few years ago. And of course, you know, the power of S-curves, exponential growth, and what happens as these networks take off. Metcalfe's law. Don't think we even got into Metcalfe's law today. But man, that was a packed show. Lots of insights there. So I do hope you enjoyed listening to Mark. Please do remember to subscribe to Pod 99 in whatever podcast app you are using, so you know when each new episode drops. But that is today's show, brought to you, of course, by Wealth 99. So thank you, team. Thanks for listening, and bye for now.